Good morning, this is Gary Kamen and welcome to Trends and Futures Position Update for what would have been Thursday, February 9th. Being done early Friday morning, that's because today I'm doing something a little different. I want to focus on the US dollar and the euro. I think we might be seeing a very similar setup in these currencies as we saw last year. Now you know I don't like making predictions, but there's a very good possibility we'll see the dollar drop in the spring and summer and the euro rise. Of course, if any European countries collapse, things will change. Yesterday, the Greek finance minister said his country must decide if it will remain in the euro or not. This decision must be made before February 15th, but this morning, Greece has announced a deal on austerity measures required for a second bailout. Unfortunately, we heard this over the past weekend, so stay tuned. Yesterday, Chesapeake Energy announced yet more cuts to natural gas production, sending prices up in natural gas, and released this morning the U.S. trade deficit has climbed to a 6-month high. In December, the U.S. trade deficit hit $48.8 billion. In November, expectations were for $44 billion. They came in at $47.1 billion. So looking at our current positions in currency futures, all of our long and short positions are doing quite well, as you see here, except for the Japanese yen, where trend traders holding on to a losing trade. But as I mentioned, I want to focus on the euro and the U.S. dollar. And the first currency I want to look at is the U.S. dollar. Now first, we're looking at the March 2012 U.S. dollar index futures contract. Trend trader recommended a short January 23rd, right in here, as the market broke through 80. At 79,934, open trade equity as of close February 8th, which is 78,734, is a potential profit of $1,200. Second resistance is at 79,045. That's giving us a potential profit of $889, and the buy trigger is at 82.31. That's giving us a potential loss of $297. Currently, ADX numbers are at 45. It's a strong downtrending market. You see that right in here. MACD is dropping a little divergence, but it's well below the 0 on the histogram line, and it is below the signal line. So I'd say MACD right now is bearish, and stochastics are in deep oversold territory. So manage your stops accordingly if you're in this trade. $1,200 doesn't turn into a losing trade. But looking at a weekly chart, this is the weekly chart, and it goes back 3 years. Here we're looking at January 2010, January 2011, in January 2012. You see what happened in 2010. US dollar shot up. You see that right in here. You see what big money was doing back in this time period. Commercials were adding to net shorts, and large specs were adding to net longs. You see the market got overbought here, and it was there for quite some time. But look at the setup we saw back in January 2011. The market showed a nice strong move up that first week of trading, and then everything came down. And it came down to 73 right in here. And what did we see here? Not a lot of activity going on between big money. Then we see the market come up starting in September. Had a little move down here, but came right back up again, testing the high of 82 here, which we never got to back in here. Market's up the first week, and we see now the market's coming down. However, what drove this market up? Well, you can see that right in here. You see that buying and selling of big money. Market's now correcting on a weekly chart from overbought territory. And for me, understanding how the Fed operates, the U.S. trade deficit is getting hit pretty hard. And it seems the best way for the Fed to help our trade deficit is to lower the value of the dollar, especially in this time period right in here. If our dollar gets lower, more countries overseas will buy our products, especially our grains. However, for us here in the United States, things become more expensive. So will we see this take place? It's a very good possibility. And let's take a look at the euro. Now here's the March 2012 euro futures contract. Trend trader recommended a long January 26th at 131.10. Open trade equity as of close February 8th, which is 132.53, is a potential profit of $1,787.50. Second support is at 131.87. That's giving us a potential profit of $965.50. And the sell trigger is at 129.02. That's giving us a potential loss here of $2,600. ADX numbers now are at 38. This is a strong uptrending market. See that right in here. MACD is moving further away from the signal line, is moving further away from the 0 on the histogram line, is adding divergence, and MACD is bullish. And stochastics are currently in deep overbought territory. So in the euro, we're managing some very nice open trade equity. Just like in the US dollar, $1,700 doesn't turn into a losing trade. So manage your stops accordingly in this trade. But looking at the weekly chart of the euro, you can see it's opposite of the US dollar. Here's January 2010 right here. Here's January 2011. And here's January 2012. Here's the major drop that took place in the euro back in 2010. As we know, the US dollar is high up as the euro dropped. And then we see what happened in 2011. The euro started coming up, dollar was dropping. Now we see again the euro coming up, and we see the dollar dropping. And with big money, we see the opposite taking place that took place in the US dollar. We see the commercials actually adding to net longs and large spec adding to net shorts. Here we see the mass consolidation here, and here we see the opposite of the US dollar. Again, commercials are adding to net longs, large spec adding to net shorts, and the market comes down. Now we're going to want to keep an eye on these two groups, both in the US dollar and in the euro. I'm looking forward to later this afternoon when the COT report comes out, and weekly stochastics have now corrected out of oversold territory and are heading up. Here we see a green technical trade signal right in here, getting into this trade a little bit earlier. But what's going to happen now in March, April, May? If we look at the 2011 year, the setup is very similar, unlike 2010. Now the next chart I want to look at is the Forex pair Euro-US dollar. This happens to be the highest volume Forex pair traded. Trend Trader does quite well with Forex. As you can see here, the short was taken on November 1st, right in here, at 137.02. The exit took place on January 27th at 132.29 for a potential profit of 473 pips. That's right in here. Of course, if you look at the green technical trade signal right in here, this would have got you out closer to 128 and 129 right in here, locking in around 800 pips in profit. That would have been a really nice trade. But like the futures contracts, many times Trend Trader holds on to these trades a bit too long for me. So even in the Forex pair Euro-US dollar, we see ADX numbers at 43. It's a strong uptrending market. MACD is moving further away from the signal line and is bullish, and stochastics are in deep overbought territory. So how do we know if this is going to take place? Well, you don't know for sure, but big money will help a lot in telling us if this is actually going to happen. If we continue to see this take place, rest assured this is going to happen. This is not a timing tool. This is just showing us that big money is supporting either a weaker dollar or a stronger dollar. And day to day, prices can change, especially with the European debt crisis. But now with the U.S. trade deficit having problems, and the Fed's only tool for that is knocking down the US dollar, we could see this definitely take place again. But like I mentioned, anything bad happens in Europe, it'll be bad for the euro. So this gets all tied together, but the bottom line is big money. So as far as I'm concerned, the best place to track big money is trends in futures. So over the next few weeks, we'll really get a good view of what's happening in the US dollar and the euro. So that's it for today's special currency update, where I highlighted the euro and the US dollar. Until later today, when I cover the softs markets, have a great Friday morning, and as always, be well, trade well, and follow the trends.